ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right. Hi, everyone, and hello, and welcome to the next episode of the Daily Currency Call presented by Forex Trading Asia. And I hope everyone had a good session yesterday as well, if you were trading in the markets, and also if you were trading around the FOMC event earlier this morning at 3 a.m. GMT +8 time zone. I hope that all went well. There was some chatter in the LCMS Traders Club, which was really good to see. It looked like there was some nice quality trades taken as well with some pips made. So that's always good to see. And a big welcome to everyone watching this live from the LCMS Traders Club. Make sure you do visit the Jindal Thai website to get signed up to the club. We are taking on new members. And also welcome to everyone watching this on YouTube with the delayed telecast. And just a quick introduction as well. This is the currency call that is presented every Monday to Friday at 11 a.m. GMT +8. And the currencies we look at are as follows. On Monday, it's the Aussie and Kiwi. Tuesday, the Euro. Wednesday, the Pound. And then today, Thursday, Yen and Gold. And then also CAD and crypto on Friday to wrap up the week. Now for today, we do have a little bit to go through. We obviously had the FOMC meeting minutes that were released earlier this morning in our time zone here. And real frankly, Gimme and I were just discussing it, and there was definitely a change in the tone as well of that meeting as well. So just to get things kicked off, and before I do proceed though, we do have the disclaimer as well. So just an important thing to note here, guys, and I will share the screen for this as well. And I'll just bring up the disclaimer. I'll just close that and disclaimer now. Sorry, everyone. Just something to take into consideration as well. We will be talking trade ideas too, so it's very important to understand that any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering into any trades. And just to kick things off, Kim Hong, currency strategist at LCMS Traders, will be discussing the FOMC meeting minutes and just going through the highlights there as well. So over to you now, Gimme.
Alrighty, thanks, Scotty. Okay, FOMC meeting minutes. Yeah, as I was mentioning on Monday, okay, we're not really expecting a surprise coming in from the central bank, all right? However, I would say we did receive a little bit of a surprise from them, okay, because of what they actually discussed, all right? So let me just head over to the meeting minutes. Okay, so if you guys want to look for the meeting minutes, this is the FOMC page. I'll be sharing with you guys the link later, okay? Then you just have to scroll down all the way to, where is it again? 2020, wait, where is 2020? Okay, 2022. Oh no, I should just go straight to 2021. And then under December, okay, so the minutes is being released for the most recent meeting, which is the December 14 to 15 meeting, all right? So click on the PDF version under the minutes section, and there you go, all right? So one of the most important thing to pay attention to is whether the central bank mentioned anything about when interest rate hike will take place, all right? Because right now, it's just speculations that the central bank will be increasing interest rates as soon as April, even March, okay? Once the bond buying program, okay, once the quantitative easing program ends in March, okay? However, no mentioning about when interest rates hike will take place, you know, in the minutes, okay? But, okay, there's something that the central bank discussed about, and that is the unloading of bonds. Okay, what's this whole unloading of bonds, right? So, as you guys know, the central bank has been purchasing $120 billion worth of bonds all the way up to last November before they taper it down to to, I think, 105 billion, okay? And then right now they actually speed up the pace, doubling up the pace, okay? So throughout this period of time, they have been buying bonds and bonds and bonds, okay? So there is actually some, I couldn't exactly remember the figure, but it's some few trillion, okay? Right now, the US FOMC is actually holding on to few trillion US dollars worth of bonds, okay? So in the long run, okay, in the near future, I would say not really long run, but in the near future, they would love to unload all these bonds, okay, because they buy the bonds to help out in the markets and things like that, but they can't be holding on to the bonds forever, okay, in order to successfully, I would say, transit into policy normalization. They will have to sell back the bonds that they've been purchasing for years, okay. So the selling back of bonds, okay, is actually called the unloading of bonds, all right. So they did discuss about this, and okay, let me show you guys the specific line in the statement. Okay, over here. Almost all participants agreed that it would likely be appropriate to initiate balance sheet runoff at some point after the first increase in a target range for the federal funds rate. Okay, so let me just get the timeline out. Okay, quantitative easing is expected to end in March, probably like 2 months down the road. All right, after which the central bank will be looking at its first rate hike, okay? And based on the central bank's most recent economic projections, okay, many of the members are expecting 3 interest rate hikes in 2022, okay? And, because everything has been hot, especially inflation, okay, the central bank is expected to increase interest rate as soon as tapering ends in March, okay? So we may actually be seeing an interest rate hike from the Federal Reserve in March or April, okay? And right now, okay, regarding this whole unloading of bonds, the participants, okay, the Fed committee members, okay, many of them, okay, almost all of them are actually feeling that it's appropriate, okay, to actually start this unloading of bonds as soon as the first interest rates hike comes in, okay? That is really very hawkish, okay? Because, once they put an end to this whole QE buying, this QE program, and then start to increase interest rates, and then start to unload these bonds holdings, okay, that will put them in a very good position towards policy normalization. Basically, life before the 2008 economic crisis, okay, the Lehman Brothers collapse, and whatever took place during that period of time, okay. So this is actually a very hawkish detail provided by the FOMC, okay, which they did not actually talk about it during the press conference and during the monetary policy statement released back in December, okay. And that's not all. I'm going to show you guys one more statement that makes it more hawkish than the already hawkish tone has been sent out, okay? Over here, it says, many participants judged that the appropriate pace of balance sheet runoff would likely be faster than it was during the previous normalization episode, okay? So when they start to sell back the bonds that they're holding right now, okay, they can't just sell back the whole $1 trillion bond worth of bonds at one go. Okay, that will definitely create a catastrophic, market moving event. Okay, so they have to do it slowly. Okay, well, the pace depending on how they deem fit. Okay, of course, the faster the pace of unloading the bonds, the better it is. Okay, the earlier they can clear off this $1 trillion bonds holding that they are having right now, the better it is, the more hawkish it is for the US dollar, okay? And right now, what this sentence over here is saying, okay, is that, many participants actually feel that a much faster pace is appropriate, okay? as compared to the previous normalization episode, which is back in 2017. Okay, back in 2017, they actually started to, before COVID, all right? They have been running this whole QE since the 2008 financial crisis, okay? And which is why at the moment, the Fed is holding on to few $1 trillion worth of bonds, okay? So back in 2017, they actually started to sell back part of the bonds, okay, at a certain pace, all right? Right now, okay, the participants actually feel that it's more appropriate to sell back the bonds, okay, at a faster rate than back in 2017, okay? That means, what this means is that many of the participants actually feel that, we should really get rid of the bonds faster, than previously, because the market's running hot already, right? And this is definitely way, adding on more hawkishness to the whole discussion of unloading of bonds, okay? Which is why we actually see a strengthening of the US dollar, okay, when the meeting minutes was being released earlier on today at 0300 GMT plus 8, okay? And Scott and I, we were just talking about how there was actually a strong sell-off in the equities market, okay? So if you guys would look at the S&P 500, NASDAQ Composite, and the Dow Jones Industrial Average, okay, there was actually a strong sell-off in the markets, hence leading to the rise in bond yields, okay? And when bond yields rise, you guys know already, okay, it has a direct positive correlation with currencies. Hence, the US dollar will be strengthened as well, okay? And okay, why is that the case, right? Look, as soon as the FOMC, okay, achieve policy normalization, okay, as you guys know, interest rates will hike, all right? That will definitely make any cash-related instruments, financial instruments, okay, like bonds, more attractive, okay? With these hawkish minutes coming out from the FOMC, okay, bond yields rise, okay? Meaning, for example, bonds being one of the cash financial instrument out there, all right? Buying bonds will definitely be more attractive. Now, bonds is actually a very safe instrument. I mean, mini bonds aside, all right? Mini bonds, when the whole Lehman Brothers saga come in and they have like mini bonds being structured for investors, okay? But let's just focus on the regular bonds such as Treasury bonds, okay? Treasury bonds are generally safe instruments, all right? And right now, if you're telling me that the Fed will be increasing interest rates, all right? And bond yields are actually rising as a result of that, okay? Wouldn't that be a more attractive instrument to hold as compared to the more risky equities, stocks, shares, however you want to call it, that is out in the market, right? Which is why we are seeing a sell-off in the equities market, which will lead to a higher demand in bond yields, okay, in US dollar, right? So if you guys are actually like trading, or if you have your trade overnight, you guys may actually see quite a, I would say, okay, it's not like a tremendous movement and things like that, okay? A tremendous big movement has already taken place last December, okay, when the Fed double up the pace of tapering, okay? Now, what this minutes has just did is actually add on to the hawkishness, all right? So will we be seeing the US dollar be strengthening more? Well, Scott will be sharing with you, okay? So any questions on these minutes? Okay, I received a question from our member. It says, when they unload bonds, what impact on currency? Okay, like I've mentioned earlier, unloading of bonds from the Federal Reserve, okay, actually from central banks, all right, is actually good. It's actually positive for the respective currencies, all right? What is it again? The RBNZ, okay, Reserve Bank of New Zealand, okay, they have already stopped the quantitative easing program, the LSAP, right, the large scale assets purchase program, and they are actually in the reinvestment stage. Okay, now if they were to actually move on to unload the bonds that they are currently holding, okay, that will definitely be good for the New Zealand dollar. Okay, so similarly over at the FOMC, okay, I don't remember the other central banks actually mention anything about unloading of bonds or have a major discussion on that. But the Fed it seems like the Fed is the first one. All right, I can't recall any mentioning by the other 6 or 7 major central banks that actually talk about or maybe have a discussion on this. Okay, but I think Fed is the first one who actually does this. Okay, because of that, yeah, my view is, we may actually be seeing a bit more of a strengthening of the US dollar from now on. All right. And Scott will definitely provide you guys with more details on the dollar index. Okay. So with that, I will hand it over to Scott.
All right. Thanks for that, Kimmy. And just to get into the US index now, we'll just have a look at the chart. So it was an interesting reaction from the DXY in particular to what was said. And we did have the ADP release, and it was well above expectations. Although what we saw from a reaction standpoint was that we were already around 96 flat or thereabouts, and we did have a little bit of a sell-off, and we had some buying closer to the FOMC release. And this green candle here represents that on the 4-hour time frame, or just after the release. So he really was sort of quite subdued, honestly. But just looking through the situation, and I think what we need to wait on is most likely that final news release that we have for this week, which is the NFP. So we have 96 holding, and we are trading above that now. And just to have a look at the economic calendar for today, we can just gauge now what is going to be the catalyst just to help this US dollar bullish case be held up as well. So just to have a look now at the economic calendar, and I'll just touch on this now. So we did have the ADP employment change. Even though it is shown as high impact news, we did see a doubling of the expected 400K. This is more of a lesser traded event than the NFP. So this is just simply, unfortunately, in how markets were last night, they were quite sluggish in buying the US dollar, and this didn't really help. And it was a bit of a fake out nearly, to be honest. So we just go down to, we did have a couple more releases as well in regards to the market PMI and services PMI. But again, there was nothing dramatic there that moved the US dollar either way. It was more just anticipation into what was said with the FOMC. And then we had that obviously. Now for later today, we do have a little bit of news coming out for the US. We've got the ISM services PMI. So that's going to be something. We're looking at 66.9 as expectation then leading into that. Again, if we see around what we've been seeing, where even if it comes in slightly less, it's still very elevated in regards to the PMI data. So I would say very likely, even if we have a dip down to the lower 96 level, it's going to be challenging to really say that we're going to see a test of the lower levels, which has been around 95.50 for the DXY. So, and then later on Friday, we do have the inflation data, not the inflation data, the NFP as well. So, and that's, really, it's going to be quite critical. If we get over 400K, the reaction could be quite bullish on the US dollar. Now, finally, just another piece of information. I've got the US 2-year Treasury bond yield. And I'll just bring this up now. And we've seen, this is a nice indicator to traders that we are seeing some short-term expectations of well, sooner rather than later interest rate increases. And I've been reading that it's expected it's going to be March potentially for that first rate hike as well, which is very aggressive. But again, what markets are anticipating does seem to be priced in here with the 2-year bond yield. So essentially this means that this is a shorter term bond, and we are looking at it's getting quite elevated. If we go to the 5-year, you can see that when we last had interest rate rises in 2018, how it was reacting, and we are seeing that this is continuing to move higher as well. So something just to look out for as well. It might not be crystal clear with the US dollar now currently, but I think that after this little bit of a noisy patch, we are seeing it travel back up to closer to the 96 high to even a break of 97, but it's just going to take a little bit of time. So shorter term plays are probably the way to go for now, unless you find to have a huge wide stop and be very patient, but that's challenging. Now, we do have the yen pairs and also gold just to finish on as well for analysis with Kim Hong here again. So I'll pass it over to you now, Gimme.
All right, thanks once again. Okay, actually before I hit over to the chart, we have another question. Okay, when the central bank unloads the bonds, who actually buys them? To be honest, I have no idea. All right. Okay, so look, it's $1 trillion worth of bonds. All right. Of course, they're not going to have like just one or two buyers. Okay, it's probably going to be like I don't know, tons of buyers. Okay, and my take is this. Okay, when the central bank buys the bond, okay, who does it buy? Who does it buy it from? Who do they buy it from? Right? They probably buy it from the market. Okay, market not being like you and me, okay, but probably the large institutions. Okay, in the case of the US, we are looking at Goldman Sachs, JP Morgan, Morgan Stanley, and things like that. Okay, and the other whichever big bulge bracket companies, big companies, financial firms out there. Okay, because during financial crisis, they are likely going to be those banks are likely going to be the one that's stuck with tons of bonds that nobody wants to buy, okay, and things like that, right? And to actually, and the whole financial market actually depends on these banks, okay? Depend meaning, a little issue, a little bit of issue with them, may actually cause, a major impact in the financial market, right? So because of that, the central bank, right, it's likely the case that the central bank will be buying the bonds from the big firms like Goldman Sachs and Morgan Stanley, JP Morgan, and things like that. Okay, so if they were to buy it from these banks, okay, who will they sell it back to? Likely to them as well. Okay, by how much and things like that, I'm not sure of the details and things like that. Okay, but yeah, it's probably going to be sold back to the investment banks, the financial institutions, and then from there on, they will actually sell it back to the market. Then, general traders, investors, retail traders, and things like you and me will have access to the purchase of those bonds. Okay, so yeah, that is likely going to be the case. Okay, and then with that, I will head over to the charts. Okay, let me just start off with dollar yen first, because dollar yen is really pretty much, I would say, a simple one. Okay, a simple and a straightforward one. Okay, now dollar yen on a daily chart, we see that, all right, starting from this week, it has actually broken my resistance of 115. All right, and okay, let me just go down to the lower time frame so you guys can see it. All right, let's head over to. Well, maybe let's just go to H1 first, because I want to show you guys the impact of the release of the FOMC meeting minutes. Where is it? Okay, where is it? Just get this away. It's 0300 GMT plus 8. Okay, so as indicated by this blue vertical dotted line, okay, this is where the FOMC meeting minutes was being released. We see a green candle, a bullish candle on the dollar yen. Okay, so like I mentioned, the minutes was hawkish, double hawkish. Okay, heading on to the hawkishness from the December's decision from the Fed. Hence, we see a strengthening of the US dollar across the board. All right, and over here, okay, just looking at a candle, it doesn't seem like a long one. Okay, but of course, we have to measure it, right? There's some 0.11% strengthening of the US dollar against the Japanese yen. But keep in mind, okay, because it's the Japanese yen, all right? So I would say the strengthening is not as much as the other currencies, like pound, euro, Kiwi, Aussie, and Canadian dollar. Okay, the more riskier currencies out there. Okay, but overall, we know that there's a strengthening in the dollar yen. So with the strengthening of the dollar yen, okay, what are we looking to do with dollar yen? Definitely, we'll be looking to buy dollar yen. Okay, right now you're looking at a H4 time frame, okay? Since Monday, there is actually a retracement, okay, from the overall uptrend that you guys can see right now, all right? And then because of the FOMC meeting minutes, all right, we see that there's actually a retracement, well, a continuation of the trend, I would say, okay? It's being started already, all right? So I will be looking for buying opportunities of the dollar yen, okay? Now, where should we be looking at it? At the moment, all right, let me just add a horizontal line. At the moment, is actually, I would say, testing to break below the 116 key level as indicated by this blue horizontal line here. Now, yesterday, was it yesterday? Yes, yesterday it actually traded below 116, but then because of the FOMC minutes, it came back up here. Okay, now I would only look to buy, okay, if it actually breaks beyond, okay, breaks above the 116 key level, okay. And to be on the safe side, okay, if you guys are aggressive, then you guys can actually look for buying opportunities at 116.2. But personally, my recommendation is to wait it, you know, till it actually goes above 116.4, which is the most recent high over here. All right. So I would be looking at 116.5. Okay, let me just shift this line to 116.5 so you guys can see. All right. So buying opportunities at 116.5. Okay. Stop loss 114.7. Why is that the case? Okay, simply because 115 is my support, and I would like to place my stop loss, okay, behind my support zone. Okay, it's just a simple reason. Okay, so 114.7 would be my stop loss level. Okay, as for my potential profit, where would it be? Right, it would be around this 117 point, I would say 7, okay, because my next resistance level is at 118. All right, so I wouldn't want to place my take profit level, you know, too close to my resistance level. Okay, 117.7 or 117.6 would be a good one. All right, so we are looking at a, I would say, slightly lower than 1:1 risk reward. Okay, but personally, I won't hold this trade for too long. Okay, 117.7 is just a potential take profit level. In a scenario whereby the European markets were to open later on at 1600 GMT plus 8, all right, if let's say there's a strong, you know, strengthening of the dollar against the yen, okay, and you guys are not around to check your charts, okay, setting your stop loss at 117.7, you know, you guys may actually get that price, right? That's provided the 116.5 entry level is being hit already. All right. So a buy stop order may be a, you know, a good one to set if you guys are not tuning into your charts every now and then. Okay. So potential profit 117.7, but still keep your trade short term. All right. Why is that the case? Because there's the NFP data coming up this Friday. All right. I'll share more about the NFP on Thursday, my thoughts, my views, and things like that, and the possible impact. Okay, but right now, keep your trade short term for dollar yen. All right, and heading over to the next yen, I will be more interested to talk about this pound yen. Okay, because of the surprises that we've been receiving from the Bank of England. Okay, daily chart. As you can see, all right, pound yen, you know, has been strengthening on a daily basis for the past 1 week, okay, Christmas rally or something like that, all right. And then at the moment, okay, unfortunately, it seems to be, you know, resisting my resistance of 158, all right. And for today, when the market has just opened like a few hours ago, it has already weakened by quite a bit, I would say, like some 42 pips, okay. And at the moment, okay, if you see this level over here that is trading, it's actually 157, okay, the psychological round level of 157, okay. really break below. Okay, that's the key. That's the focus that I'll have at the moment. Okay, really break below 157. Now, if it doesn't, okay, I will be looking for buying opportunities. Real short term, okay. 157.7. Okay, that would be my buying, my entry level. Okay, 157.7. Because if we were to go back down to H4, okay, we see that this previous high, it closes at around 157.5. Okay, that would be my entry level. But however, you see that there is actually a resistance level at 158, okay, which is really very close, right? So should you be taking this trade? Personally, I feel that you might want to really go down to H1 to take on this trade, okay? Because H4, no way is this trade going to be a very good what do you call that, risk reward. All right. So if you guys want to take on pound yen, unfortunately, it's very close to the resistance level, right? The most you can get is 10 or 20 pips, all right? Which is personally, I don't recommend this, all right? So instead of looking at this aggressive trade, this very, very short-term trade right now, okay, you guys may want to wait for it to break above the resistance zone, okay, of 158. And if you guys were to look above that, it will be 158.3 or 158.4 before taking up a buy trade, okay. Overall, pound yen, yes, I'm interested in talking about it, but trade idea wise, it's not that I would say effective over here, okay. And you see H4 time frame at the moment, pound yen is coming down, okay. No, not sure if it's going to be just a minor retracement, because if it were to actually continue to move downwards, okay, counter trend traders, yes, you guys may actually want to look for a short-term trade all the way, a short-term sell of the pound yen up until probably 156.2 or 156.3. Okay. Personally, I wouldn't want to bet against the pound right now because it's very hawkish and more interest rates is being expected from the Bank of England at the moment. Okay. So yeah, pound yen, I would say, play safe, wait for it to break above 158 before looking for buying opportunities at 158.3 or 4. Okay. Counter trend traders, if it continues to move downwards, you may actually want to take a bit of risk, consider a bit of risk, and look for selling opportunities up to 156.3 or 156.4. Okay, and that is for the pound yen. Moving on to euro yen. Euro yen, I would say it's more of a, we have the space to trade. Okay, that's what I'm trying to say. All right, we have the space to trade. Now, euro yen has just recently broken above my X resistance of 130.6, and now it became a support. All right, which is why I say there's more room for trading. Okay, to buy or to sell. Okay, right now I'm actually looking for buying opportunities. Okay, ECB hasn't done much, no doubt. Okay, but we cannot deny the fact that there is some progress, okay, coming from ECB. All right, and against the safe haven yen, it is definitely looking good. All right, and the recent trend has been up as well. All right, so which level should we look for? 131.7, which is around here. Okay. 131.7 would be a safe entry level. Okay, and right now, yes, it's weakening. Okay, to be honest, right now the yen pairs are weakening. Okay, I'm not sure if it has anything to do with the recent confirmation from North Korea that they will be firing another missile. They just fired out a missile recently, and whenever such things, political turmoil or this kind of uncertainty were to take place, there tends to be some strengthening in the Japanese yen against the risk currencies, okay, pound, euro, and things like that. So at the moment, we are seeing some weakening of the yen pairs, okay, yen, pound yen, euro yen, things like that. Not sure if it's because of that, but to play safe, all right, I'll still be looking for buying opportunities only when it hits 131.7. Okay, that's when I'll look for buying opportunities. Okay, and then in a scenario whereby I take up this trade, my potential take profit, you know what, let's just go through the stop loss first. All right, my stop loss would be at where is it again, 130.3, which is around here. Okay, 30 pips below this 130.6 level, okay, support level, because keep in mind that when we talk about support level, we generally mean zone, okay, because we don't just look at support, resistance lines, levels, zones as just a level, right? We look at it as a zone. So we need to factor in some amount of region, okay, a specific region, right? So 130.3 would be my stop loss level, all right? And then my potential profit would be at 133, no, sorry, 133, yes, 133 point, where is it again, over here, yes, 133.4, okay, just some 30 pips below 40 pips, okay, 40 pips below my next resistance at 133.8 level. Okay, so this is pretty much a slightly more than a 1:1 risk reward. Okay, definitely a way better trade to take, a buy trade to take than the pound yen. All right, so buy for dollar yen, euro yen, and pound yen. But pound yen, like I mentioned, you know, it's not a very good risk reward to take, and you definitely have to keep our trades real short term. All right, dollar yen as well, keep it short term because of the NFP. Pound, sorry, for euro yen, we may actually stand a better chance to let the trade run to its take profit level. Okay, so look for buying opportunities for these three yen pairs. Okay, and lastly, gold. Let me get the right chart. Gold, generally there's not, well, I wouldn't say there's any specific what do you call it, fundamentals for gold, right? But normally when I look at gold, I will pay attention to the US dollar because there is a negative correlation between the US dollar and gold, okay, i.e. when the US dollar strengthens, okay, there is a tendency that gold prices will fall, vice versa. Okay, when the US dollar weakens, there's a tendency that gold prices will strengthen. So excuse me. So after covering, the whole FOMC minutes and highlighting that the US dollar has strengthened as a result of the hawkish minutes, it is no doubt that we actually see a weakening in gold against the US dollar. Look at this candle over here, all right? This is the 0300 GMT plus 8 candle earlier today, and we see it actually weakens from 1823.7 to 1813.2. At the moment, it's still going down to 1,808. Okay, gold per ounce. All right. So personally, if you ask me, short-term wise, I'm actually expecting gold to fall further. Okay, because with this whole hawkish move coming from the FOMC, and remember, okay, FOMC will meet again this month on the 26th. Okay, so we are expecting a tapering of $30 billion per month from the FOMC, right? Well, unless, hopefully not, all right, unless there's more negative, what do you call that? There's more pessimism coming in from the from around the world, all right, from around the world. It can be COVID related, hopefully not. Okay, it can be maybe potential lockdowns in the US and things like that, that may deter the Fed's decision to taper further. Okay, but as of now, everything looks safe, everything looks good. The Fed looks ready to go. End QE in March. To taper QE in January by 30. All right. Because of all this hawkishness coming in from the Federal Reserve. Sorry for gold. Okay, chances are the prices is going to fall further. Unlikely we are going to be seeing any upside in gold at the moment. All right. So for gold traders out there, you guys can look for selling opportunities of gold against the US dollar. Okay, and if you guys are trading against the other currencies like, I don't know, gold pound or gold euro and things like that, then for gold pound, it's definitely going to be a down as well. All right, because pound, like I mentioned, it's been very hawkish coming from the Bank of England. Okay, so yen pairs, look for buying opportunities. For gold, I'll be looking for selling opportunities. Okay, and I see the chat blinking away. Questions? Great. Let me see. Why yen is weak? Why yen is weak? Okay, I think you mean Japanese. I think you mean the yen pairs. Okay, because let me just fire up my chart to get a quick scan. Okay, I think when you say yen is weak, you mean the yen pairs, okay? Because at the moment, the Japanese yen, okay, the Japanese yen is actually strengthening against the other currencies like pound, like yen, like pound, like euro, like dollar, yeah, like Aussie, like Kiwi and CAD as well. Okay, so why is that the case? Like I mentioned, it may actually be due to the whole North Korea planning to fire another missile. After the firing of the first, I think it was yesterday or a couple of days back ago. All right, so whenever this kind of firing of missiles or terrorism issues and things like that, or maybe bombing going on around the world and things like that, that will create some level of uncertainty in the market, okay? Because with all these threats going on, okay, be it pandemic or bombing and terrorism and things like that, it will definitely be a threat to the country's currency, okay? And because of that, investors, traders who are vested in the related financial products in that country, okay, may look to unwind their risk, okay, may actually switch to becoming more risk averse, okay, meaning, because of all this going on, political turmoil or uncertainties going on in the country, I will definitely be more, what do you call it? I will definitely tune to taking up less risk, okay, in that country. Okay, so which is why we are actually looking at a strengthening of the Japanese yen at the moment. I won't be surprised if the other currencies against the US dollar are weakening as well. Okay, because same thing, safe haven. Okay, and as well as the Switzerland francs. Okay, they may actually be weakening against the Switzerland francs as well. Okay. Can you please share your point of view about WTI? Okay, normally WTI I will be sharing it on Friday, okay, because it relates to CAD. Okay, but right now, all right, since you asked, why not? Let's just take a couple of minutes and look at WTI. Okay, let's just share the chart again. Come back to WTI. Let's go to daily time frame. Now, okay, on a daily time frame, what we see is yesterday, okay, WTI price, okay, crude oil, WTI crude actually tested to break above the $78 per barrel price level, okay, but then it came back down. Okay. This is likely due to the FOMC minutes, okay, and if you ask me, okay, the most recent OPEC meeting, yes, they are actually optimistic about the oil demand, okay, but realize that this whole COVID Omicron issue is not over yet. All right, so no doubt they are confident and things like that, but who has the final say? COVID has the final say. Okay, all we can do is sit and wait to see how the whole COVID issue unfolds. Because I think it was just yesterday or the day before, US, the number of cases has already hit 1 million a day, okay? And on a weekly basis, it hits 10 million, okay? So if you tell me COVID Omicron is dying down, I wouldn't believe, okay? If you tell me that it's contagious, yes. If you tell me that it's not as deadly as it seems previously, true, as verified by the medical experts, all right? So, it's not as daily as before, okay? But that does not mean that it's not as contagious as before, right? As seen in many countries, right? It's really very contagious. And will the government actually let this contagious virus go on? Unlikely. They're going to do something, right? They're going to put a stop, or at least to to prevent this whole spread from getting out of control. All right. And how to actually stop that? How to actually deter the virus from spreading faster? You add restrictions. Okay. When it comes to restrictions, we may actually be seeing lockdowns. Okay. Planes will stop flying, cars will stop moving. Lockdowns will lead to a decline in demand of oil. Okay, so as much as the OPEC Plus is optimistic, okay, there is still a threat. All right, there's still a threat. Hence, I believe oil traders actually don't think that oil prices is meant to go above 78 right now. Okay, hence we are seeing a slight a slight drop in the oil price from 78 to 76 and a half, 76.5 right now at the moment. Okay, so my view on oil at the moment is probably going to be a weakening for the time being. Okay, despite the optimism coming in from the OPEC Plus. Okay, any more questions? No questions. Okay, so there's no more questions. I'll hand it over to Scott.
All right, thanks very much for that, Gimme. And I will make sure the timestamps are done as well for this episode, just for convenience, because there is a lot of content to go through, just in case someone wants to review it. But that is it, guys. I hope everyone enjoyed it. Thanks for the questions from the LCMS Trader Club members, and hope to see everyone in the chat and in tomorrow's episode. Bye for now, guys. Have a great day.